Take a stab at some SPY calls here. Got slapped on SPY, down 130 on the day after that one.
You guys can learn from my mistakes.
Here is our P&L for the day. Now let's go over our trades because guys, what we could have done honestly today,
I took an SPX trade.
my fellow traders, happy Wednesday. Welcome back to the stock market. CPI news report just hit and it freaking rocketed the market. Now I'm actually swinging some Apple puts here and I'm gonna show you guys my positions from yesterday because guys, after we closed out yesterday's vlog and edited it up, I ended up trading SPX right after the market closed and made 150 on a day. And here's my screenshot for how much I'm up on the day yesterday. Plus, I decided to swing some Apple calls or Apple puts here for tomorrow. And they are currently down 15%, but I'm pretty sure at open, since the market pumped off CPI, I'm gonna be down pretty bad. Apple. Now, I swung Apple here because yesterday, this 4 hour was actually really close to the very bottom and it was closing below here. So I got in, and at one point it was up 5%, but then here we are after market, or pre-market. Because SPY just did its 5:30 a.m. CPI news report, and that thing went nuts, guys. So I'm about to be wrecked out of my Apple calls. You guys can see currently in one of them, very far, decently out the money, 227. So Monday, down $40 on Monday, $42 to be exact on Monday. Tuesday, which was yesterday, we made 150 off SPX and SPY, and I believe also NVIDIA. And then today, it's Wednesday, we're swinging these Apple calls for $80 a piece. Worst case scenario, negative 100%. Eats up half of what I made yesterday. So we'll see what we can we'll see what we can catch in the market today. Unfortunately, at 8:30 a.m., I had to go to the dentist to go put my wires on my brackets. So I only have about an hour, and then maybe we'll see if we'll come back and trade anything else. If we don't catch anything, then we don't catch anything today. So now I'm down $49. Should have closed it right when I opened it, but I was down only $30. Now I'm down. Oh, there it goes. Okay, so we're gonna close it here because Apple did not go in our favor. So $41 L on Apple, not that bad. Thought I was gonna be down like $80 for the whole trade, but we can easily recover off that for a single trade. But anyways, market is open. 1 minute in. See what else we can do. Voice chat with 3 people. Just currently trying to break out.
Intraday trading, just have this pessimistic view.
I have yet to take a single trade. Market is just slowly climbing. You can see on the 5 minutes, when I say slowly climbing, it's because we're holding this 9 EMA and we are holding it pretty decently. I can take a slap of calls here, but I don't really trust it. Reason being, because look at the 15-minute guys. Never know. Just never know. Take a stab at some SPY calls here actually off of this 5 minutes, 15 minutes. Now this is a risky one, but honestly, if the payout hits, it could pay. So look, we're at a support here. Currently bouncing off the 9 EMAs, about to get that 5-minute close here. So I'm gonna enter 2 of them for 150, $300 entry, same setup, 30% price target, 10% stop loss. This stop loss is a little bit bigger than 10%. It's about 20%. So that means I gotta get a gain of 40% if the stop loss is 20% to at least be a 1 to 2. For this to be a 1 to 3, that means I would have to make 60% in order for this to be a 1 to 3. Got slapped on SPY currently, so I'm down 130 on the day after that one. That was a 30% L, so a stop loss was pretty big. Got to figure out what I did wrong. There probably was the rejection of 15% or that Fibonacci retracement level on the 15-minute time frame. We'll still see for one more at least trade setup. But yeah, look at this trade setup, guys, right here. So what I tried to slap was that 15-minute support. Still might hit, so I won't re-enter, but stop loss. I entered weight right here. Thought we would hold this support. Next 10 minutes, closes below here. So we exited. We do gotta head out of here real soon. But here is our P&L on the day so far.
We finally got the wire in our mouth. Finally. So I don't want to show you guys my top teeth. My top teeth are the worst. But anyways, just know a couple years from now, down the road, it's going to look a lot better. And I'll be able to ching on you guys type shit. But anyways, so you guys saw me down bad earlier, 130. Now I recovered. Now I'm only down $50. I'm still in trade. I took an SPX trade. So guys, remember when I left, I took a trade on SPY. The stop loss was 30%, meaning I would have needed a 60 to 90 to probably 100% to a 90% for it to be a 3 to 1. In order for me on that SPY call, because my stop loss was 30%, in order for me to get a good gain or for it to be a 3 to 1 or a 1 to 3, I needed to get a 90% gain since the stop loss was 30% for it to be a 3-to-1 or 1-to-3, whatever it's called, whatever in order it is. I think it's 1-to-3 since risk to the reward. But anyways, guys, let me show you guys my phone. I'm currently still in a SPX trade to the downside. Only 9:20 a.m. So we're just gonna wrap it up when we get home. I'm gonna show you guys the whole market. I'm gonna show you guys all my trades, what I could have done better, because to be honest, I could have done better on that SPY trade. So let's break it down. Let's go home and let's show you guys what we could have done better, because guys, you guys can learn from my mistakes. You guys can learn from me losing. And honestly, today should have been a way better risk management on my part. To be honest, I shouldn't have entered. Based on the 15-minute time frame, I shouldn't have entered that SPY call. But either way, let's go home and let's show you guys what I'm talking about. And let's wrap up this video.
Back home, all showered up, and let's talk about what we did wrong in the market. Let's go over our trades and let's show you guys and wrap it up for today's video.
Here is our P&L for the day. Now, I can't close out that last trade that I'm in because it went nowhere. But you guys can see down $56 on the day today. Now let's go over our trades, because guys, what we could have done honestly today a lot better if I would have just stuck to what I said originally. Because after editing up my vlog, I realized I even said this is a risky trade to take calls here off this balance here because it's a 15-minute time frame. But let's break down why I entered, because I entered on 5 minutes. So watching the 5-minute time frame, seeing that we're holding this nice EMA to the upside, getting very bullish, I decided to enter here off of this nice candle. Hopefully this is a good dip, nice bounce as a support, expecting us to continue on to the upside, but we don't. Next candle, I literally just closed, and you guys saw 30% L on that one, and that is how it was down pretty bad, 130 on the day. And then I took some SPX puts here because market was looking very bullish, especially on the 15-minute time frame. Then we got a nice drop, sold there, and we tried to enter one more last one for like a cheap $17, which is why 83% L on this one is only $12, $56 down on the day, not that bad. Now let's check the 15-minute time frame, because the 15-minute time frame tells us something different. So here's the 15-minute time frame on SPY. Literally, this candle right here is telling me this is very bullish, very bearish. There's no reason to enter any positions to the upside yet, and I entered here. Now this is a decent support. Maybe I should have bought next day expiration contracts, because literally the next dip or that dip down wrecked me pretty bad.
That's how I did today. And with all that being said, guys, what I'm learning is this. I'm probably not going to buy same day expirations. When I trade tomorrow on SPY, the S&P 500, I'm probably going to buy next day expirations, because these past couple days, last week as well, I've been taking next day expirations, and they actually have been helping me a lot. Even on the dips have been only 10%. Today I took a 0-day expiration, and that dip was a 30% dip. So that's also something that I'm learning too, that I'm realizing that maybe I should start buying some further expirations, a little bit more premium, but they definitely do save you a lot better. So with that being said, let's test it out tomorrow, and then we're gonna do what we always do. We're gonna try something new. And so this week coming up, and the rest of the week coming up, and every single day until we learn that it's a little bit better, we're gonna buy the next day expirations on the S&P 500 when we take a single day trade. We're not gonna swing trade it, we're just gonna day trade it, but next day expirations, just to save us a lot better, stay a lot better, and hopefully the delta can be a lot better too. But anyways, guys, wraps up for today. I hope you guys had an awesome day, and I'll catch you guys on tomorrow's vlog.